Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. My guest today is Jennifer Ruelens. You may know her by Hold It with PM Jen. So we are talking buy and hold, property management. We're talking about a playbook for buying and holding rental properties. She does it in North Central Pennsylvania, but she's going to tell you how to do it anywhere right now. Let's go. This is episode 312 of Zen and the Art of Real Estate Investing with my guest, Jennifer Ruelens. Jennifer is a speaker, real estate truth teller, and that really is the truth. You're going to see soon, a buy and hold enthusiast and a property management expert. She spent more than 20 years in the trenches managing large rental portfolios, stabilizing properties, and coaching hundreds of owners through the messy, money-making reality of providing housing as a business. Jen, welcome to the show.
Thanks, Jonathan. I'm so excited.
Yeah, me too. Me too. Have you legally changed your name to Hold It with PM Jen? That's my first question.
I'm working on it. No, yeah. I mean, couldn't it be the most boring name in the world that I'm now trying to make just a little bit unique?
You spice it up a little?
But yeah. I realize so I call myself PM Jen and nobody knows that means property manager. So I have to immediately say that because they'll say things like, one person said, "You mean like nighttime Jen?" And I was like, "What? No. I'm not on OnlyFans.
That's not the right. Yeah, that's not right. The right connotation, like NyQuil. No, not really. Yeah.
One person asked. They said the only PM I know is perimenopausal, and I was like, "Well, how dare you? First of all, accurate. Second of all, no."
Right. Give me a couple of years before we go there. Well, it's awesome to talk to you. I was saying to you before we hopped on, I enjoy your content on LinkedIn because you are a truth teller, and so am I. So I'm excited for the listeners to hear us chop it up. I don't know what's going to come out, but I know it's going to be fun. When did you first get involved in real estate? How old were you?
22 years old. And just the story was I started a business right out of college, moved to Harrisburg for it. It failed, as it should have. Businesses fail at a huge rate, but I could always sell things. So I got a job leasing apartments at a 300 unit apartment complex in Mechanicsburg, PA. And it was only a couple years old. So it wasn't distressed it was 88% occupied, which is distressed for a new build in 04.
Yeah.
It just didn't make sense.
Yeah.
It was being poorly managed, poorly leased. So they put me 22 years old, nothing. Literally, I came from farm country. Oh my gosh, you want to hear something funny? So where I came from, everybody had farms in Lancaster. And my mom, we drove by these garden style apartments. There wasn't a lot of them, but we drove by some and I was like, I don't know, 12. And I said, like, what are those? And she said, those are apartments. That's where divorced people live. I know. And it made sense because there was this girl at my school and her mom and dad had gotten divorced and she got off the bus there. And I was like, dots connected, mom wins again, right? Anyway, I didn't know apartments.
We can't say that that's not partially correct.
And that first community, I just filled up in 10 months. I had it 100% occupied. And so they made me the manager. So they're like, you're 6 foot tall, 23, full of energy for this. I was like a Labrador puppy. I just put energy and fearlessness into it. And because I came from entrepreneurial people, property management made a lot of sense to me. And that's how my career got started back then.
Well, what did you like about getting the properties leased? Because it's not for everybody.
What did I like? I mean, I don't think I particularly liked leasing. I burnt out on it really quickly.
Oh, okay.
I love the problem solving of property management.
Okay.
I love, the owner wants to go low flow, like water restriction, and a tractor trailer or 2 tractor trailers of low flow toilets show up and there's 30 buildings.
Yeah.
Like he did pay the invoice, but somebody has to put the toilets in or somebody has to vent all the dryers out. And, those kind of projects, I loved that problem solving. I like the problem solving of people. And I mentioned I'm 6 feet tall. I'm a big woman. I'm tall and I'm brash and I'm loud. And I've kind of always been that way. And I'm not afraid of conflict when I'm in the right, and advocating for others. I'm like a really good advocate for others. And so these problems that other people shy away from, maintenance problems, tenant relations problems, whatever they are, I just hit them head on and have good problem solving. And I love it. I'm a weirdo for it. I like the weird stories.
Yeah. But I think I know from my history of property management, which I absolutely hate. I hated being a landlord. It's just I'm an introvert. So like the uncomfortable thing, I would rather just not talk. So when we had a lot of properties in one area, we had a full-time property manager just for our own. Man, it was great. Because like then it was worth every cent because we didn't have to deal with it. There was a lot of properties, but it's just not my thing. And I know that it's not a lot of people's things. So when people see just get rental properties, it's no big deal. They don't understand how important property management is. They try to do it themselves. And then they're like, a couple uncomfortable things comes up and they just leave it alone. And then they end up with a dump, that needs 23 grand in renovations. This is your business, right?
It is. God made me a bitch and I charge 11% for it. Like I sell my gift.
Worth every penny though. Yeah.
But and when you're advocating, and that's a horrible thing to say because we do have a perception problem in my industry that we run ramshot over people. And that is absolutely not my MO. That's not a good long-term strategy. But, you're absolutely right. And there's a great example of this. So I have this doc I work with. And he's a smaller man, not extremely small, but he's smaller than me. Anyway, we were walking his doors and I go into a property, shoulders back, head up. I'm going through doors and not accepting much. And I'm on business. And he was cowering by the door like he was uncomfortable. And he had, Mrs. Jones, so nice to see you. Are you well? He had that small talk. I'm like, whatever. I walked through the property. I did what I needed to do. And when we left and he had just kind of like cowered by the door, I said, Are you uncomfortable? And he tried to say no. And I said, well, then I'm going to need you to act like you belong there or get out.
Why are you peeing in your pants in the corner? That's not how it works.
And I said, but I get it, sir. If I went to the hospital to your exam room and somebody came in and took their clothes off and showed me their weird, gross problem, I'd be by that door trying to back out too. But I need you to know this is your money. Like, at the hospital, you're in charge, you're doing your thing. Here, I'm in charge, and I'm telling you, you're not serving yourself because he was being a doctor to these people. He was taking care of every single one of those tenants.
That was my dad to a T. Well, my dad was just a nice guy. He was a lawyer. I was a lawyer. But so when I was growing up, I knew all the tenants. Like we were friends with them all. They were all behind, 3 to 6 months at a time. But he always, we never didn't get paid. He was just very creative. He knew the people. They, some of them were contract jobs. This is like back in the 70s and 80s. So, it was a different thing. There's no internet. It's hand-to-hand collections, literally collecting cash and checks every single month. And so I knew early on, before all these people who are buying properties now, after just seeing some videos, that it was a person game. And when I was 15, he made me start collecting rent and figuring out how to get it when they were behind. And it taught me a lot. Do you think that a lot of people who get into it just don't understand? Like they're actually people living in the house, things break.
It's not the investor's fault. They're under that impression. All of the education, we should get really clear. Yeah. You're not an investor only unless you have a property manager.
Right. And still you have to manage the manager. Like that's the whole thing. It's not passive.
It's not passive.
Yeah.
And we use terms like investment and asset, which are the same words we use with things that truly are passive. And it is confusing to the uneducated investor, to the uneducated consumer. I actually use the word consumer a lot more when I talk about the people I'm working with, because in my small market, they are less sophisticated. We are not attracting, people very well endowed in equity. These are regular working people trying to build generational wealth through buy and hold real estate. Unsexy, get rich slow kind of stuff. And so they hear things like investor, or they hear people talk about cash flow. And I'm always out there saying like, okay, so the investor says, well, how are you buying anything? I can't get the numbers to work. I said, what work do you want the numbers to do? And they go, well, I want them to pay me. I want some money back. And I go, okay. All right. So you're going to take your money and you're going to go to a closing, you're going to put it in, and you're never going to put in another dime. And that ATM just sends you money.
Right.
And
Nothing
they go,
breaks.
yeah,
It's perfect.
Isn't that how it's supposed to work? And I go, I just want to tell you, like, as a girl doing like 500 to 600 doors at a time for hundreds of people, there's no money in the first couple of years. You should not be, until you're old, getting money from the properties. They're taking care of themselves. They're growing in value. They're giving you tax advantages. And yes, I mean, if you're properly allocating for capital improvements on these old properties, you really shouldn't be living on them until they're paid off. And you don't need 50. That's another thing. Stop talking to me about 50. Talk to me about, well, first of all, if you do one, I'll talk to you about 10. I won't talk to you about 10 until you've done one.
Yeah. I mean, well, one's going to tell you whether it's worth it to try to do two. You know, you just might hate it. And look, that you know, as well as I do, property management, you know, generally has a bad name in just the regular circles, just like real estate investors have a bad name. But there's a lot of bad property managers. There are a lot of great ones, and people don't really know how to find them because it's not like a very flashy internet type of business for the good ones. Yeah. Good ones are kind of like good investors. Nobody knows them. They just crush it, you know? Now it's changing because you can be more vocal about it, but it's an industry that I think is very like underknown to the regular investor. They just would like go online and see who is in basically the online phone book. Like we used to just go in the phone book, look up property. Oh, AAA property manager. They must be good. You know, and I think that's how people think, but it's really, you have to find a manager that works together with your personality. Like your personality might not be the right fit for somebody who's, you know, very meek and is like, oh, why, you know, that's too much. You're asking too much of the tenants. They might think by you doing your job, it's not reflecting well on them. Of course it is, but they don't know because they're babies.
Yeah. It's, you know, I think we in property management are kind of in a riptide to the real estate industry in general, right? So we have a quantity versus quality problem in terms of real estate professionals generally.
For
terrible reputation. I happen to believe there's going to be a re-racking of professional roles in real estate sales. And I would love to see property managers establish their value really well. Because that's the thing. In real estate professionals, sales professionals, agents have done a really terrible job informing the consumer why they're worth all this money, the value they bring.
I mean, me with an independent brokerage, realtors are the worst. I always say it. I don't know what anyone's disputing. They're terrible. 90% are garbage, shouldn't have their license. It's just the truth. I don't know why anyone would say any different. And you're exactly right. They're not informing them because they're just have commission breath. They're just chasing the check. Oh, they got the check. Never going to follow up with them. I mean, it's very, and the business itself, you know, all the industry of real estate, absolute catastrophe.
Yeah. Who else in real estate professionals that a consumer would go to for advice is getting paid the same way they would, getting rich slow over time? It's the property manager. Everybody else in their world, agents, lenders, appraisers, inspectors, title companies, one big fat check every time they transact. So no wonder they feel like they can't hold a property, because when they run into problems, they're encouraged to sell the property, not solve the problem. And that sounds like the real estate professionals going, oh, I'll get you out of that and get you into something else. Yeah. Well, those transaction costs are making that consumer lose any profit they had gotten in it. And you're still, when you put them into the next asset, you didn't do any better setting them up. You didn't give them realistic expectations or information. And so I'm known as the deal killer around here by realtors.
That's my nickname. It really is. Yeah. Because people would come to me, investors would be like, hey, come look at this deal just as a friend. And I walk in, I'm like, no, this is a piece of shit. I'm out. Like, what do you, I was like, the realtor would be there. I was doing them a favor, even though they had a realtor, and I was right in front of them. Like, this is the stupidest thing I've ever seen. Like, this layout doesn't work. That's not a third bedroom. You're never going to cash flow. You're going to be negative. So yeah, we're the same. We're probably related.
Yeah. I walk through these properties and sometimes the realtor will be there and they'll just kind of wave their hand like, oh, you can paint that. That's fine. And I go, stop. And I'll say, look at me in the face. I make a real show of it. Stop saying that to them. That's wrong. That's wrong. And I get that you're going to make every cent you're going to make at closing. I'm going to be standing there next to them, taking their call about why this thing hasn't leased or why it won't attract.
And the realtor's not taking their call again because they know it was a bad property. I try to convince people not to become a landlord because I know people who are going to suck at it. If you're not thinking, if you have no concept of hospitality and caretaking, you're going to be a bad landlord. And even if you get a good property manager, you're going to fight with them because you're not going to want to spend the money, because what you're saying about the repairs, I think a lot of it is just user error. It's cheap landlords. Not that they're all like that. Mom and pop landlords have been crushing it for years. It's how I grew up. But I think there's a lot of people, as you were saying, they buy a property and then they're like, oh, wait, unit 2 needs a new furnace. It's $6,200. They're like, well, can't they just like be cold in the winter? No, they'll die.
It's crazy.
And they're like, oh, now I'll just sell it. You're going to sell it at a loss because you don't want to put in a furnace. Like, this is real estate, or else just buy something turnkey.
Furnace and then you'll sell it, actually. Order of events.
Right.
It makes me nuts. I can't stand it. And I get, I think there's a language problem maybe. Like, I just had a thought as we were talking, right? So if I could change the words landlord and tenant to housing provider and resident, doesn't that start to more accurately describe? I mean, it's a consumer, it's a business relationship. You're providing housing. They're consuming the housing. They are your my clients are the investors. Their customers are the tenants, and I take care of their customers. Yeah. And so that language change, as well as investor, like investor should mean somebody who's doing something passive, because otherwise you just bought a job. Because if you just went and bought a 2-unit with no property manager, you bought a job.
Yeah. Yeah.
Oh, and hot tip. You tell people to say they're the property manager, right? Even when they're the owner.
They usually, or insurance, whatever. I grew up being the insurance guy. So, I mean.
What do you mean? Like, to the tenants, you were the insurance company?
Yeah. Before my dad introduced me I was a kid, but then as I got older and we had new properties and I was going to do like a spec run to look at them, I would be the insurance person first before they knew. And then if I liked them, then I would be like, aha, just kidding. My dad's the owner. I'm going to collect your rent. But I never knew what I was walking into because my dad bought some weird stuff and let tenants get away with a lot.
So the advice I always have to people is, from the time you're looking at properties, like if I, Jen, I'm out with my realtor looking at properties. Oh, are you looking to buy this? Oh, I'm the owner's representative. I manage their properties, I'm going to self-manage, right? I get a little card, Jen, property manager. Because guess what? I'm hopefully going to be successful. And if I want to stop getting the calls, I have to fire myself as the property manager. Yeah. So there has to be a communication. Jen Ruelens, the property manager, has been fired and Jonathan Greene's been hired. Start calling him. But if I'm the owner, they'll never stop calling me, will they?
Yeah, yeah.
And so anyway, I'm really persuasive to people. Like, the problem is new investors, they got a little swagger and ego to them. They're feeling very proud.
Right when you said it, I was thinking ego is the problem. Like, oh yeah, it's almost like a defiance. Like, I'm the owner, I own your unit, and you do what I say. And it's like they're just going to put rocks down the toilet. What are you doing?
It's the weirdest thing. I compare it to buying a pizza shop. Buying a 4 unit's no different than buying a pizza shop, because tomorrow it's going to have to open. Somebody's going to have to make sure the cheese was cold and make the pizzas and clean the bathroom and open and close it. And to a lesser degree in terms of tasks, but those things need to happen on a daily basis at your building. You are buying a business that you're going to operate. So why do you go into it and go, I'm just going to raise the rents and not fix anything and fire the cleaner, and I'm going to make these numbers work? I swear, every time somebody talks to me about making the numbers work, I go, you can play in your spreadsheet all day. And spreadsheets are a part of this, I know.
I love spreadsheets, but I don't use them for real estate the way people think. It doesn't make, because I grew up with a scratch pad type investor. That's how my dad was. And I'm an asset hunter. So for me, I'm looking at the totality of the asset, the quality of the tenants, whatever. If I like it, I'll get it. I'm not going to lose money on something if I know what it's worth, or I'll bid and I'll lose, and some dummy will bid too much. But yeah, I think that it's a good point. I mean, people look at things on spreadsheets, especially when it comes to rental properties. It's why people buy turnkeys. They look at it and they're like, oh, look, that's going to be $320 a month. And then they get in and they buy 3 of them, and then a furnace breaks and they don't make money for 3.5 years. I mean, welcome to turnkey. Not all, there are some very good turnkey providers, but that can happen.
Yeah. And nobody's there with you 2.5 years later when you're in that position, right? Nobody's going to go, oh
Right.
my gosh, buyer, you're right. We just really sold you a lemon there. No, you're in it. You have to. And that's what I love about buy and hold. It's that entrepreneurial thing where like, I follow my own mistakes. I don't like partnerships. I'm kind of like a conservative person that way. I'm a little independent.
I'm not a fan.
I don't want to make up for whatever you did or didn't do because I know I'll wake up at 5 in the morning. I know I'll put in the work. I know I'll do the thing right. And so when I see people doing that, it makes me a little nuts. Yeah.
Social media has created a big problem with just rental properties in general. People think it's too easy, or they don't understand the tenant dynamic, or they don't understand that they have to manage their property manager, but it's still solvable. We were saying before we hopped on, like there's people like us, like we're just going to tell you the truth. If you don't like it, it's not really my problem, but like I'm trying to tell you, landlording's not easy. So if you want to do it right, you know what? I bet this is their objection all the time. Hey, how much is it going to cost? Oh, 11%. Oh, well, my numbers don't work. All right, cool. Have fun. You know, like you don't know how to manage. Like you're going to lose more than 11%.
And you forget. So there's two sets of books, right? There's like the pro forma. There's the self-manage and the manager. So on the self-manage, you've made a bunch of assumptions and the numbers work.
Yeah.
And then on the other one, all you did was add 11%,
exactly.
less gross rents, and you didn't adjust anything else. And you're right. If you're just hiring,
you didn't put the vacancy down because they do a great job. Thanks.
You didn't put the rent up because Lord knows, you know what I do with properties that come in here? I get them to market rent because I'm willing to serve tenants at that level, at a market rent level. Yeah, I'm raising, on average, when people bring me properties, I raise the NOI and therefore the value by 20%.
Oh, wow.
Yeah. And I talk about that all the time, like risk and return match. So when risk is up, return is up. So you hire a property manager, your return went down. You paid me some money. Your risk drops so much more. Yeah. And we think about lower vacancy, better managed expenses, but it's things like the tenant kills themselves in a unit. How quick is that social worker who owns that 5 unit going to get it back on the market? 10 days. You know, not to brag, but to brag, 10 days, blood, guts, security deposit out, account settled, on the market for the next tenant. That is what will save that owner's return. Or, I just like the thing that just happened a couple of weeks ago, like a $6,000 water bill from the water authority. Like, hey, we knew your water meter was broken. We just fixed it. But if we had fixed it 2 years ago, you would have been billed all this. And you have to know what you're doing, go to the right places, get this dealt with. But my orthodontist client certainly wasn't going to do that. They would just put on another set of braces and pay the bill.
Yeah. That's because that's passivity, but that's not how you do management. When you were saying up 20%, in my head, I was thinking, honestly, the way that you said in the beginning, just the fact that you're willing to have the tough conversations, that's 10% right there savings. And I truly believe that most tenants aren't afraid of rent increases. They just are afraid of a lack of transparency. So once you're transparent and you show them what the market rents are, and then you say, hey, in order to get you to the market rents, we're going to do a couple upgrades in here. Won't that be great? And they're like, they know they're getting a good deal. They go on Zillow and Redfin. They're not stupid. So then when you go in with
the tenant, unless the market is offering something better to them.
Right.
And I'd argue they want transparency, but they want service. I think a lot of times in this housing provision, landlording business we're in, we forget all the obligations we have under that lease. We act like our job is to ensure that they're doing everything.
We just collect the money. Thank you.
Think about that. You this morning woke up and maybe the water was cold in your shower and you called your landlord. You're counting on them to do something over the next 8 to 10 hours to ensure you don't keep going without that. Now, let's say the person on the other end of that line isn't competent. What are you going to do about your baby's bath tonight? That is what they're worried about. And I'll tell you, that is something we do so well here. We answer their calls. We do their work orders. We bill them back for when they get pests and it has to be solved. We'll bill them back for it. We hold them accountable on every level, but it is transparent, documented. And I say, if you put a work order in the day before your eviction, I'll be fixing your work and then evicting you the next day. There's no lack of service toward the asset ever. But that's a very professional outlook. That's not a passive investor outlook.
No. And I think about the asset a lot, and I'm sure, well, I'll see what you think, but I'm sure you're going to agree and then have a lot to say about it. I've always said that the people who are late and non-responsive at landlords, they don't realize that they're just creating themselves a bigger problem. If you don't respond to a water issue because you don't think it's a big deal, then in 6 months it's a mold issue, and now you have to get 3 units out. I mean, it's just idiotic to not respond. So I think you're right. Like, yeah, sure, it's great, it's transparent. Sure, the person upstairs, had a leak. Great, you told them, but are you going to fix it so that, I don't have a black spot in my ceiling and it keeps going? It is a big deal. And that's a service and a managerial thing. It's running a business. That's what people, forget. And you said something again before, and I'm glad I just remembered so I can follow up on it. I've always said people who are busy professionals and then they buy a rental property, it doesn't make sense because they're just buying a second job that they're not good at. And then they're going to get worse at their real job. Like, oh, I had to go unclog a toilet on Thanksgiving and now I have a surgery the next day. Cool. I don't want you operating on me after you were unclogging a toilet, because you don't want to hire property management so you cash flow more. Is this what you see a lot? I mean, just in terms of your landlord scope.
It is so difficult to convey value of time, complexity of the issue. They just don't understand. And to the point of, you were talking about tenants and, so I want to tell you just about my stabilization plan because I do increase rents a lot, like as part of this, how to make properties worth more, right? I use a definition of a stabilized property that is a property that attracts and retains qualified tenants. You can also say compliant, right? Tenants at market rent with no deferred maintenance. So when I make a stabilization plan, I'm attacking those things. I love to make a production of eliminating deferred maintenance and eliminating those long nagging work orders. Loose doorknobs, smoke detectors beeping, the threshold strips. We go in and the new buyer's like, do you really need to be doing that? And I'm like, can you really need to increase the rent 30%? You dummy?
Have you heard a smoke detector that keeps going off? It makes you want to jump out the window and then you're going to unplug them all and then they're going to have a fire and now your whole property is done.
It says slumlord, like new guys showed up and the rent's up and not one thing's changed. We're going to clean the carpets in the common areas. We're going to paint the mailboxes. We're going to make sure there's good lighting. We're going to do all these things. And that is how we're not going to lose your building. That is how we're not going to lose the tenants out of your building in a mass exodus. And they just don't understand. But listen, why should they? They've never done it. Have I ever done something dumb and lost tenancy? Yeah, in 22 years, I probably have. I've probably had a strategy or two that didn't work out. And I've certainly observed a lot of strategies that did and didn't work. This comes from experience. And, being a property manager, I'm always telling these people, like, the line is whether or not I'll sign you up. So unlike a realtor who will take any listing no matter what, I'm very picky because I have to be able to make money on this thing. I get paid alongside you, owner. So if I pick up crappy assets or crappy clients, I'm just going to sit on properties that don't perform. And
your time versus money
them
sucks. It's too much time for not enough money, no matter if it's a profit or not. It's bad value.
And several investors have figured out, Jen's acceptance and Jen's opinion, because I plan on her managing it, is a really good indicator of my ability to succeed with this asset. Find that professional. The one who, as I always say, my ass has to cash the checks this mouth writes. And I've been here 13 years. I'm succeeding in my investments. For my 150 clients, I'm succeeding. So if I tell you it's going to make money and I'm excited about it, you've got if you're signing up with me and do my plan, you're pretty assured you're going to do it because I've got the track record and I'm willing to put myself out there and lose alongside you. And we have to look for real estate professionals who are willing to work like that.
Yeah, I agree.
Or charge simple fee for tasks. So maybe if you're a buyer's agent, you charge per showing, per offer, per contract negotiated, per inspection visited and arranged. And you don't get a portion. Maybe you're going to sell your time service company. But if you want to be tied in on the success of the asset and the transaction, then maybe you need to tie some of your compensation to the outcome.
Yeah. I mean, you made another good point, though, before about common spaces. And then it made me think about the curb appeal part, because I've always said, landlords who don't take care of the common spaces and the curb appeal don't get it. Why would someone who lives on the inside of a crappy looking building take care of the inside? you're not even taking care of the outside. So they're just going to like, the ants there, of course they're going to call, but they're going to just start to not care about little things. You're going to end up with way worse units. When they come home and they see that, you've planted flowers seasonally and it looks nice, everything feels better and they feel like they're getting a better value. So then when you show up the next year and say, hey, we're going up in rent $25, and they think about the flowers and the fact that you made like a bike rack, they're like, oh yeah, no problem. It's worth it. Yeah. I don't want to move.
Not enough blind tenants out there, because when these landlords do their landlord special, and
they can still smell too, and tenants they got a bad garbage spot. Landlords do crazy stuff. They bring all five
senses to the showing, as it turns out.
Exactly.
The landlord special, I call it, where you buy the old multi-unit that needs remortared on the outside. It needs a roof, it needs landscaping, but they painted and put LVT on everything that it'll stick to, And they go, well, we can just put the rents up to market. And I go, well, how is that exactly? And of course, those other problems are too difficult. They don't know how to solve them. They don't want to pay those big dollars. And I go, but how many blind tenants are there? I've got to get them inside. And you are really misunderstanding what qualified tenants want. They have options, right? And I always say, like, what if I wanted to bring my mom over for dinner and I want to see that she sees the neighborhood I live in and the staircase I walk up every day and what my neighbor's doors look like, or maybe I bring a date home. I'm a qualified person. I want to be proud of my home, and you're not going to get people who are like that. And again, that's just inexperience. It's people doing things, and we make it seem approachable because we've normalized kind of the bragging about this. And that's the thing. We all need to realize all those people bragging like that are lying. Like,
oh yeah, of course.
Fully lying. Lying. Not one person like Jonathan or I is ever going to say this is easy or you can get rich quick.
Yeah.
You can't. You can have occasional great deals, maybe a windfall, but you're not going from zero to nothing on other people's money. You're not changing your lifestyle like that. That's not how it works. And I can't stand. Is it ChatGPT has us all just admiring millionaires? Like, you should listen to what I have to say because a millionaire told me, like, or a billionaire told me. And it's like, I actually don't admire very wealthy people at all.
Hey, it's Jonathan. I hope you're enjoying this Truth Teller episode with Jen Ruelens. And if you want to get assistance, maybe you own properties in North Central Pennsylvania. I hope you do, because now you know what to do with them. Go to holditwithpmjen.com. She also has a ton of content out, so look in the show notes for the YouTube channel, Instagram, LinkedIn, where her and I connect all the time. Find her. It's fun stuff. Let's get back to more. Have you ever read The Millionaire Next Door? It's like the anti-millionaire next book. It's incredible, because it's just like, I always say that the people at real estate investor meetups who you think have the most money are not who you think. They're the one who looks like they're the barback, in Tevas or Crocs or something, and a ripped shirt because they just came from doing it, and they just, they're just doing what they want. I mean, it's a really messed up industry. So as you said before, I mean, sometimes you can't blame people, but I think people have to really do better due diligence than watching TikTok and thinking that getting, 13 Section 8 rentals is going to be a killer for them. It's hard work.
We do, Jonathan. We're out there spreading the good word, the real word, but it's not sexy. Listen, if you want, there's other guys out there selling sexy.
Right.
Maybe to some degree, bigger pockets, like even bigger pockets as a whole has marketed this. And I think they've done great with education and things, but
it changed.
Frankly, the broiness of it, the machismo.
Yeah.
I really appreciate women in the industry because, I identify more with their risk tolerance, but when they talk about it, with more vulnerability and with more explanation. And I just there's two gals who wrote, what is it called? The Self-Managing Landlord, Amelia and Grace. They're trying to do something for women.
I've had them both on. I love them both. Yeah.
Perfect. Their book, not revolutionary, but by being written by two young women with a real mind toward process, toward actually making this work on their own. I was like, there's a million of these books. That one's valuable. My lady face talking about things is valuable to half the population out there or the more risk averse man who maybe doesn't identify with the Rolexes and the blingy bling and the
it's funny. The things don't go together. The Lamborghini you don't get from buying, a shitty rental property in Dubuque, Iowa. you cash flow long over time, and then you get one and two. I mean, I said Iowa because, that's where Amelia and Grace both got started. And like, they weren't making huge cash flow off them. None of us were. The rents that I was collecting, I mean, again, 70s, 80s when I started collecting rent, it was like, a few $100. But it's a lot of money to the tenants, and you have to understand how everything works and what they're dealing with. And it's like, if you just read the forums, especially on Bigger Pockets, you read the forums, and I go in there, and you just know people should never be landlords. This is one I see all the time. I want to get your take on this because I'm actually interested in what you think about this as a property manager. Single person moves in, they sign a lease, and then, wow, they get into a relationship. Who thought that would ever happen? And then the person's staying over all the time. And I see a lot of people post like, oh, should I start upgrading their rent? I'm like, now there's two people. That's more help. Like, they're good tenants. Did you qualify them? Like, this is a good thing. It's not a big deal. What are you going to say? People can't have relationships now?
Right.
It's
question
crazy.
is really more the humans living in your property. And I'm much more concerned about liability. I don't want adults, if I can get away with it, legally competent adults without being on a lease. So and it happens, right? Somebody does something disgusting like fall in love, and we add a member to the household. Yeah. I mean, who keeps doing that? And who can do that? I've heard it's really hard out there dating. But
I don't know what that is, but it's gross.
It's weird.
Yeah.
So when that happens and they either present or we discover, and because we actually do preventive maintenance inspections, we're discovering people, we're discovering animals a lot, and we go through this.
Animals, yeah.
Yeah. And we go through like, hey, is this person a guest or not? And we can do the revisits. But if they're not, they apply and they get added. And with the exception of included utilities, the rent doesn't change based on how many people are sleeping under the roof. Like, that's greedy.
It is hard though for the people, the crazy people out there who do this, and they get together, and because there's a long time before you're actually like living with someone. It's nice to stay over, so somebody's there 3-4. They're not a tenant, they're just staying there. They have their own place. So until they don't have their own place, they really can't be on the lease. So it's like, how do you encourage them to be open with that? And especially with pets, like, just tell me you're getting a cat.
Yeah.
We're going to find out. We see the litter box. That's fine.
The answer is, Jonathan, being willing to have that conversation. Yeah. So what am I doing
from the beginning too, right?
Yeah. I've set the expectation. I've followed through on my inspections because I inspect what I expect. And when a violation or non-compliance is found, we've systemized the expected and we humanize the exceptions. So in general, your pet's sitting for your mom. Okay, well, there might be a fine, but the animal's got to go. I'm going to check back. I need to confirm if there's an animal surrender. I want paperwork. Your boyfriend doesn't actually live here. He has an apartment across town. Great. Just let me see, his lease or something. And I know that he has a place.
You're literally talking about all the stuff that I would never want to do, which it just explains what my tolerance for landlording is. I'm so uncomfortable asking those questions that I wouldn't ask them. And that's why I know I shouldn't be a landlord.
Yeah, but here's what a lot of people do. So they have that discomfort. They don't ask the question. And then they say, because I'm that kind of person, because I'm a good guy. I don't raise the rent.
And then they go on the forum and complain. Yeah.
Because I know what it was to struggle. I hear all of this. I'll say, okay, you've got a property where you're making $800 a month worth of rent and it should be at $1,200, right? You're leaving like 50% or, a third of it on the table. And they'll say, I just don't like to raise the rent. I have it paid off. And I go, when did you adopt these people? Because this property is meant to serve you. And I need you to understand that your expenses have all kept up. And even if you don't have a mortgage, the opportunity cost of that capital should be deployed.
Exactly.
I'm making 20% cash on cash.
Yeah.
So there's an opportunity cost. And if you're just being lazy, then say, I'm lazy. I'm not willing to have a conversation. I'm not willing to risk it. And I'm a coward. And listen, it's your property. Do whatever you want with it, but don't malign the tenants, the industry, or the price you get for that property when you go to sell it.
Yeah. See, that's what my dad knew. My dad was a put a gum in the hole type of fixer, but the tenants loved him. He let them get away with stuff. But when stuff happened, he fixed it. He was always there. He'd show up on his own. He'd call someone to fix it. Like, he was always there. He had a very good person-to-person relationship. And he knew
powered by his personality.
Yeah, exactly. And his personal, and his honesty. And he was he was always there. They called, he followed up. But he also knew, because he was a gum fixer, and hey, my guys will fix the roof, no permit type of thing, left my sister and I a lot of bombshells. He knew when he went to sell that he wasn't going to get market value. He's going to get a little bit less. Didn't care. Because he was a cash buyer. He knew exactly what he was doing. And when he wanted to trade, he would trade. And he didn't trade that much. But if he's just trading to get something better. And I think
I've met a lot of these people who run their own portfolios. They do things that I'm like, how the hell does that work? And they do it through their personalities.
Yeah.
That's not replicatable, right? Like, that's a gift.
No, yeah. Right. You can't do someone else's personality. Yeah.
And I'd argue that in the 2000s, those skills probably wouldn't translate with the same risk profile as they did in the 70s.
I agree.
That the way he was managing people with his personality and decisions he was making just wouldn't fly. And that's what and I find with young male investors, they talk a lot about what dad or granddad did. And I try to talk to them about, because when they talk about making different decisions, like hiring a property manager or hiring professionals, getting help, they feel guilt, they feel shame. Sometimes dad or grandpa's even telling them, like, what the hell are you paying them for?
Yeah. They're very common. Very common. Yeah.
Yes. And my young men, and I know I'm talking about men, that's just really my experience here. I know women invest. God, I want women to invest
across
so much
the board. Women are much better landlords. Anyone who disagrees with that, like,
so
welcome
much better
to the reality here.
But my young men who invest, they're eager, they're participating, they meet their partners, they keep participating, they have a baby, they keep participating, but now they're starting to get shit for it, right? Painting that unit all weekend and showing it every night over dinner time, bath time doesn't fly with mothers of today. And young men aren't being like pulled back by their wives. They want to be there. Back in the 80s, my dad, if it was for the benefit of the family, could have been gone for months. Nobody judged him. Yeah. The expectation was lower, but dads today want to be there. And when I find them in my property management office, and by the way, also in a realtor's office, is when those kids start doing fun things. T-ball games, dance recitals.
Exactly.
And the wife and it used to be, my wife says, I either have to sell it or hire a manager. Now I'm seeing them both. It is very much, she's like, the price this is paying to our family is too high. He's just looking at the numbers and she's looking at different costs. And, a property manager can be a great solution in that. But that's what I see about young men. And I want them to not feel guilt or shame about not doing things the way dad did or grandpa did, or it's a different world. It's just a different world.
I'm just not a DIY person. So I was saying before, I don't put together IKEA. I call someone to put it together, or my son does it because I suck at it and I'll break it and I'll hate that I ever bought it and I'll just throw it out. So I know better. And it's the same way that I'm thinking about this. Like, just know what you're good at. And if you did get a good start at it, and you got good at it, but maybe you run out of time for the DIY because you have a job and you have a family and now you have 2 kids and, the kids become between 6 and 10 and you're just basically a chauffeur for the next 12 years. I mean, how do you have time to go unclog a toilet? You don't.
It's just a piece too. It's just a piece of your life. Like, kids are really a short part as long as you have them close together. Like, they're really a short time when you're hamstrung to them and you're restricted.
It's good though. I mean, I really like your style because I think that people do need a wake-up call. And sometimes they need a wake-up call with their spouse, with their partner, whoever it is, to just say, like, listen, there's an easier way to do this. And P.S., you've been doing DIY from 3 years. Have you even checked your equity? You're up a lot. So maybe if you do a refi, now you're not going to be as worried about it.
I remember what I was going to say. I think people don't understand how much money they're truly making from their investment. That they look at just the cash flow, right? Like the income less expenses.
Yeah, right.
But I call it the 5-way payday. There's 5 ways buy and hold pays you, but it is very difficult to say at the end of the year, oh, I got this much in appreciation. Like the Wall Street Journal doesn't say your property's up this many dollars today and tomorrow. Yeah. Tax, depreciation. Huge. You have to work with your accountant and go like, hey, how much does having this save me in my tax burden? Because it's a little bit mysterious.
Right. Did you do a cost seg? Welcome to money.
Right. Same thing with the leverage. Like, how do I measure? Like, I guess I'd look at my change in principal balance year after year and really get honest with myself about, oh, I made that. That's part of my return. It's not in my pocket. I can't go spend it at Red Lobster tonight, but it is part of my net worth. And then that last one, inflation hedge. How do I put a number to the opportunity to all those 55-year-old guys who bragged to me in 2023 that they sold everything during COVID? I said, you dummy, you left 2 cycles on the table. And where the hell did you put that money? I want every year to send them a report about the money they're losing.
And they didn't do a 1031, so they paid the taxes also. Yeah.
Gone out. And I said, you're far too young. Medicine's going to keep you alive forever. And you're going to look at Redfin till the end of your life, hating yourself.
Yeah.
And you left 1 cycle early. There's indoors and outdoors in the cycle. And if you're a buy and hold, there are no outdoors for this young, pretty face. I'm going to get real wrinkly before you see me looking for an outdoor. But I'll know that last point in my cycle, and my properties will be stabilized that even if I die, my heirs will wait if they want to.
Right.
For that outdoor.
Yeah. So 2 things. One, I want to get your take on so my advice to people when they get their first property is don't even look at a second property until you've fixed everything. You've done all the CapEx. Don't play around, because the problem when you go to get 2 and 3 properties and you don't do the CapEx is then property 1 shits the bed, and now property 2 and 3 don't make any money, and you really hate your life, and now you sell all 3 at a loss, right? Am I right on that?
Yes.
Yeah.
And okay, so we buy it, stabilize it, insure it properly.
Yeah, right. I was thinking when you were doing this when you were talking about how the gen stabilization thing, that's where I was thinking at it. That's why I wanted to come back to it.
And I've now seen some evidence that like your smaller properties, your onesies, twosies, you don't need to worry so much about loss of income, but burn a 6-unit building where the shell exists, and 12 months ain't going to do it. And I've seen people lose their portfolio because they were improperly insured. But back to your point of don't buy another thing until what you have is stabilized and performing. Okay. So I'm doing this right now. I've been beating the drum at this company for the last year on owner performance. I want us in my industry. We don't measure an owner NOI. Oh, my owners made more money this year versus last year, or I did this versus that. It's a little complicated with the data, but the good managers are starting. So, I've been saying, I'm not very optimistic about the next 5 years economically. And this is not a wild take, but I am one of the only people in real estate who's not saying like those interest rates are going to drop next quarter for sure. And then prices are going to change. Like, no, this is a new normal. By the way, this is a low normal, not interest rate environment.
Yeah.
So if that's the case, then it's going to be acquisition time, right? If you're growing, it's acquisition time. You can only acquire if you're strong. So I go, what units do you have that you haven't told me about? That because I won't like them.
Yeah.
Because I'm a judgy lady. I need you to do deferred maintenance. I need you to act like all your properties are going to be appraised in a year, because they kind of are. You're not selling them, but you need them to be performing for you and to be a strong pillar in your situation. But I see the eagerness. What happens is that new investor spends a lot of time figuring out how to do it, and they do it, and they're excited, and they go, and they have this vision of, I can keep doing this and I can get to 50.
Yeah, right.
And we need to stop that. We need to say,
it's the worst. I hate door counters. It's just embarrassing.
Yeah.
You're not going to like it. If it doesn't make any sense. The calculations that they do without doing the maintenance is crazy, and they always lose it because look, a furnace is expensive. So it's like, they're just not thinking of these things at all.
They must teach that at spreadsheet school. Like if the numbers don't work, clear out maintenance and tell yourself a story why that's okay.
Well, one thing about the spreadsheet that drives me the most insane is that before people buy, all of the calculators out there have you put your CapEx as a monthly instead of a reserve amount. So you look at it and they're like, oh, well, I'm going to allot $67 a month for CapEx. No, it needs to be like a minimum of $15,000 that you have for that property at all times. Like, am I right? Is that high? I think that's like safe.
Depending on the number of properties you have.
Yeah. I'm saying you buy your first property, even if it's a duplex, you got to have 15 grand because like something's going to break for 5 grand within the first couple months on any house. It's just the way it is.
It's a question I ask when I'm signing up a client, particularly when they knew. I go, hey, let's just pretend it's Wednesday at 10 a.m. You're in a normal place than you are that day. And I call you and go, problem, solution equals 10 grand. And I need it now.
Do you have it? Yeah.
Well, I don't ask if you have it. I tell you how to send it.
Yeah, right. Yeah.
Hey, Mr. Owner, or Mrs. Owner, what's your options? Do you have a line of credit? Because of course, the best time to get that's when you buy it. Do you have a line of credit? Do you have cash reserves? Are you going to be using a credit card? Like, what is your plan here? And that I see these investors, maybe these these couples looking at each other like, I don't know. What are we going to do? Where is it going to come from? And I go, because if you're like me and I woke up and the water was cold this morning and it's $1,000 water heater replacement, I don't know. I might have cold showers till Sunday if it saved me $200. I don't know. But if I have a tenant, it's happening tomorrow. And if tomorrow is your birthday and Christmas Eve, it's still happening tomorrow.
Well, yeah, because general landlords, they didn't go to real estate school. They didn't study the law. They don't know about constructive eviction, and they don't know all the things that you can not do as a landlord that will create a constructive eviction. I'm an attorney that won't get you any money. You know what I mean? And so these are the things you have to know. Not that you neglect the other things, but there's certain things that, look, they're not going to have to pay. Maybe they don't know that, but they might find out. ChatGPT is probably going to tell them, you just queue in constructive eviction and see all of the stuff that landlords can't get away with. I think we're just shining the light on it's hard to be a landlord. If you want to do it, work with professionals and don't chase a short-term goal, because there's nothing about buy and hold that's short-term. It's called buy and hold, not buy, do nothing, quickly sell and make a bunch of money, drive a Lamborghini and go on boats and retire early at 23 after never having a job. That's not really how it works. Maybe it does on TikTok, but that's not real life. And that's not how old school investors did. How my dad did it still works now. Not necessarily the personality, but find good prices for rental properties, get a good deal, put tenants in, figure out how to do the job well, and keep doing better. And then when you need it, get professional management to help you because you can't keep up. And he didn't want to do that because he was very cheap. He liked to really squeeze the juice out of the orange. The second, after he passed away and my sister took over all these properties, we were like, boom, property manager. Like we were just like, neither of us are getting up to do anything. Like this isn't the way that we do things.
Did he manage them till the end? Like he never had to abdicate his responsibilities?
I was helping as a teenager, but I don't think he ever had. He had friends who helped out and he had lots of contractors and stuff, but I don't think he would never have paid for, I'll ask my sister, but there's a 0% chance he ever paid for property management. He just wouldn't do it.
Was it a big lift? My sister and
I were like, first day, we're like, yep, we're good.
Was it a big lift when y'all took him over and had to kind of right the ship?
My sister knew a lot about the intricacies. I knew a lot. I knew the tenants. We had 20, 30-year tenants at the time. And then we eventually traded out on a bunch of the properties, not because we thought they were bad investments. My dad was like I said, a patch it up thing. So it was just like, some of the tenants were old, they're 20 years. Never did a renovation in there. So we got rid of most of them. My sister kind of wanted out of real estate and just likes more passive index fund investments. So we only have a couple properties left together. It was fun though. I think we both learned a lot trying to work out and see, okay, why did our dad do this? Okay. He's a smart guy. He was self-made, came from nothing and made a bunch of money in real estate. But because he was a good person and he talked to a lot of people, he knew how to find deals. He found all deals off market. We went to yard sales to buy properties. Everyone's like, why you guys go to so many yard sales? My dad makes an offer, cash offer every single home. Can still do that today, by the way.
Yeah.
You don't need to get an app for $1,000 a month just to tell you how you can skip trace somebody. You can just go to the yard sales. They're going to sell their house. Why else are they doing a yard sale?
Yeah, I'd love to normalize a more realistic picture of the everyday real estate investor.
Yeah, me too.
You think about the guy who owns 100 doors driving the Lamborghini, the social media guy. You think about institutions, and you think about little old ladies with their little retirement fund on the other side of the double. But we don't see popularly in popular culture the reasonable landlord. It's always this cat versus mouse,
Right,
like
yeah,
we
right.
hate each
Terrible
other.
or swimming in money.
Well, what do you think of this then? So I want, toward my aim of empowering and advocating for real estate investors and my industry, I'd love to have a reality show. I think of about two different ones. One, following me and my team solving those real problems. How did we solve the $6,000 water bill? How did we solve the dead dog that needs to be removed in 2 hours before the closing? How did we deal with the U.S. Marshals busting down the door? I mean, the stories are endless. The things, the unsexy things we do to keep properties performing, to keep tenants housed, to make sure tenants are treated fairly and equitably. I love the idea of that one. And then another one that's like a bar rescue show where okay, Dad, maybe you inherited Dad's property and it's a mess. And you're like, oh gosh, Jen. Oh. And I go in and make a stabilization plan and we stabilize it and we talk through through those conversations. Market rent has some information behind it, right?
Yeah.
We talk about expenses, we talk about risk. And I just wish in our popular culture, we were more literate in like the economics of housing.
You're going to laugh because one, my son and I watch every episode of Bar Rescue. We watch all those shows. But for years, I'm like, I could do a brokerage rescue show where we show up on the brokerage. Let me see all your agents. What are they doing? That one's fired. That one's fired. That one's fired. Okay, let me see your P&L. Oh, you don't have one? Okay, you're fired. Who's your broker? It's the same thing. I think these things are really good. Those shows are great. I mean, it shows how bad you can run a business into the ground. And what I want to finish with is one of the biggest things that I see out there that's a problem just across not just the United States, but other countries. You have mom and pop type landlords who build a great business as a landlord. They own a lot of properties. They get up to doors. Somehow they've managed them or with help. And then they get to the age where they're, like you were saying before, they're ready to transition. They know they're not going to be around much longer. And guess what? The kids have no interest in doing it because they think it's hard. So they have $1 million business sitting in front of them and they're like, oh, I just want to get the money, pay the taxes, and, go to Bali. No, you're literally sitting on something that your own kids would not even could do whatever they want. You could pay for their college if you just hire a property manager and do it right and run it like a business. And they're like, oh, well, there's a lot of maintenance. Are you seeing this? Because I really think it's a problem. I'll buy them all. Yeah.
We talk about in my industry, the great wealth transition, right?
Yeah,
from
huge.
Boomers down to X and millennial and maybe even lower, and that they're sitting on all this equity, on all this real estate. I agree with you wholeheartedly, Jonathan. But the one thing I'd say about that scenario, if they're that alienated to work and risk, then they got to get out because they will be the wrong kind of housing provider,
of
right?
Course, I agree.
But it must.
And maybe they weren't brought into it like I was. Maybe they didn't even know. If you wake up and you say, "Oh, with 51 units, I don't want to manage that either."
You know what I often find? I find weird dynamics between self-made parents and the children. So is it that they have a distaste for the investment or the work, or is it wrapped up with approval and love and validation and whatever exists between families?
Yeah, for sure. Yeah, I think so.
Yeah, and that's what women can see and women can navigate better. And the thing I'd leave you with is, when you invest in women, you invest in communities. So I say women need real estate, but real estate needs women more.
Oh, yeah.
So women need, of course, to get some economic power, grow and control wealth and things like that. And I think that'll be great for communities. But when women are in control of the housing and making those longer term risk decisions, that's it. Long-term risk decisions that affect, it's infrastructure for our for our country. Housing is infrastructure. And I think we can do better than Lamborghinis and Section 8 strategies on TikTok.
I hope so. Yeah.
As I try to build my TikTok, follow me at Hold It with PM Jen, making real estate unsexy since 1981.
Well, that's the content that people need. They need to see the realities of these industries. Every person who wants to operate a bar or restaurant should watch either Bar Rescue or one of Gordon Ramsay's, shows, because that's what's behind the doors. It's not easy. Why do all restaurants go out of business? Why do people, give up properties and lose money? It's very hard to lose money on a property. It really is in America, unless you just buy insane, get swindled. It's only if you hold the property for 5 years and you lose money, you've done something tragic in your business. It's almost impossible. So
and even if you do something tragic, Here's the thing.
Probably
Time
still make
heals all
money.
deals and all dumb shit. Like just hold
Buy real
on.
estate and wait. Yeah.
Like, there's a million stories of successful real estate investors who in 2004, some mortgage lender came to them and said, you want a condo at the beach? $1 million loan? No prob. You don't even need to sign wet ink.
Yeah.
Don't worry about it.
Just blink at me. You got it.
Right. And this guy had worked hard his whole life, built up a real estate portfolio. He had his fun property in Phoenix or in Myrtle Beach or wherever.
Yeah.
Then the housing crisis hit, right? He starts looking at his statement. He's underwater, whatever. And he's never lost money on real estate in his whole life, but that one sexy condo. And then he sold it. And then he looked on Redfin every year for the next 15 years. And he goes, if I just held on. Yeah. Time heals it all. There is a correction coming. Prices are always going to be volatile. You know what? I'm going to give you 2 recommendations before we leave, and your listeners might love this. One, if you're really indignant about the state of real estate and you think consumers deserve better, Housing Rebels. Do you know Housing Rebels?
No.
Okay, look up Housing Rebels. I think it goes by sellinglater.org. Wendy Gilch is doing this. She's a real estate agent out of Pittsburgh, and Douglas Miller talking a lot about doing this better. Really think you'd dig them.
Definitely.
What was the other thing? Housing Rebel and this book. Just listened to a podcast today with this author. He's a property manager named Justin Anderson, and he wrote Funny Money. He was trying to figure out the connection between price and value in real estate. So he took the classic, if A equals B equals C, then A must equal C, and he used gold. So he, through time, priced the average property price in ounces of gold. And he has, long story short, and listen, there's a lot that goes into this, coming off the gold standard, printing money. There's a lot of things. But in general, the average mean value of a home in gold is 300 ounces. And what is it today? Little over 100.
Yeah.
So that means to tell you there's value on the table to be gotten. But how do we look at these high prices and understand this? Well, we should rewind back to 2010 when we thought the numbers didn't work on that 10 unit. Remember when we didn't think the numbers would work?
Right. Look at those numbers now. No, well, you're looking on Redfin now, crying into your soup or your Lamborghini.
And so cash flow, not on day one. I'm buying Funny Money and gonna read that because I think that's a very interesting way to think about these things. But you have to get into it and you have to hold it for a long time. So don't measure your success in years 1, 2, 3, 4, or 5. If you're making long-term impact value changes 1 through 5, years through 50 will be 6 through 50, you will be making money. No problem.
Yeah, I agree. Awesome. Where's the best place to find you? Is it your actual new name, holditwithpmjen.com?
It is. Hold it with PMGen, 1N. I'm not an animal. .com is my home base. You can find all the socials, where I'm going to be speaking, and my free playbook. Guys, if you like North Central PA, there is a free 2025 no bullshit playbook for buying and holding rentals in North Central PA. This is not the kind of market that they talk about. So if you have interest in my tertiary market where average cap rates are 11%, price per unit, $65,000, and you might want to talk to me about my company, One Focus Property Management, where I manage properties here and I am still accepting new clients. And that playbook is free for now. I might start charging next year. So hop on over and get yours today.
And just before, so for people who have properties in the area or want to buy properties in the area with the intent, is there a property amount that's too low for you? Like, will you manage a single family? Yeah. Awesome.
Single. So my market is offering an average multifamily size of 3 units. It's a lot of doubles here. Single family, biggest property is only about 20 units. But no, there is no limit on small or large. But there is certainly a limit on optimism of stability. Right. So if I don't believe I can stabilize it, attract and retain qualified tenants at market rent with no deferred maintenance, then I wouldn't.
Yeah. Yep. Awesome. Well, it's been a pleasure. Glad we got to do this. It was fun. I have a feeling I'm going to have you back because this is just a fun conversation. So really appreciate your time.
I am a show pony. That is for sure.
Well, I really appreciate it. It was a fun one. Thanks so much.
Thanks.
All right. That was Jennifer Ruelens. Again, you can find her at her name, holditwithpmjen.com. I'm Jonathan Greene. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 313 of Zen and the Art of Real Estate Investing. It's Ash Patel of Invest Beyond Multifamily. And that's the website too. So just plug that in, put a .com at the end, you're there. Investing in necessity-based commercial real estate properties in growth markets. We go all through their strategy and what Ash has done over his career to figure out what works for him. It's a great show. Can't wait for you to hear it next episode.